Hey everyone, welcome back to Crypto Cash. Thanks again for joining me here. I hope you're having a fantastic day. We're taking a quick look here, of course, at Bitcoin, seeing what's going on. We're going to update some of our fib levels, not the more recent ones, but the larger time frames, and just kind of see roughly where we're at here because we want to understand how much further down this retracement could go if it does. Based on the smaller time frames here, we are seeing some support at about the 67,500 mark. It's a rough estimate of 67.5. It's proven to be a previous resistance level, 0.382 in the most recent time frame. So we're going to see if that can continue to hold, and then of course draw out some bigger fibs here as well, just from bottom to top. Now that we're pulling back instead of top to bottom from before. So welcome aboard if you're new to the channel. I hope you can learn something here today. If you do want to become a better trader, cryptocash.tech is the site. Link down below, and we can talk a little bit about helping you out, I guess, because got a lot of new members coming over, seeking that guidance, and of course coming over for some signals too. Took some nice shorts here recently. Ocean 50% in 3 days. Filecoin 37% in. Basically, that's is that the most recent one? Yeah, that is. Yeah, we got Filecoin, and then of course we've got what is it? Another couple of shorts here as well. I think that was Fetchcoin. There we go. Fetchcoin at 34, or more so fetch.ai, whatever you want to call it. Anyways, what we want to look at here is some backend data, see what's going on, and just quickly recognize that we got some heavy liquidation levels here at about 65,000. That is, of course, the more recent longs, obviously, that just jumped in. You can see this line only goes out a little bit. These aren't previous longs, but generally speaking, we got a lot of late longs in the 65K range, just kind of easy numbers there. Obviously, some shorts at 74, those are a long ways away. We don't got to worry about that for a little while. I don't personally feel. We could very well see a little bit of a pump, but we're going to probably be range bound here, folks, between low 66,000 as well as, upwards of this range here, about 69K, okay, because we got some lines on the chart I'm going to draw out here shortly to kind of show you that there. We can quickly look at them 1 month, but I'm fairly certain it's going to be as low as, the 50s/60s. Yeah, there we go. We got most liquidation down at 50K. Heavy concentration from things when they ramped back up back in February. Isn't that crazy? Less than a month ago, about 3 weeks ago, we had 50K. And now we're squabbling around the 60K range, 66, 68. It's funny how that works out. Anyways, that's roughly where we're at here. So just put that in the back of your mind there. Heavy amount of liquidation at 65, just below the price action, just right where the price action wicked down to. Okay, so now that we've drawn out these larger fib levels, just to touch on that here, let's quickly just look at the weekly, so you can kind of get perspective here and see, we got these strong fib levels here, okay? So again, when you're looking at these levels here, the most common retracement level is oftentimes the initial 0.382. That's the common retracement level for kind of a shorter or smaller time frame pullback. So am I speculating that we're going to see 51,000 because of that? No, but that is a previous resistance level / turn support. Essentially an area we want to pay attention to. We had some weekly closes there before the price took off and didn't look back. Okay. So as a worst case scenario, I think that would be a level in which we could see, but I think it's very unlikely. I do think this 0.236 level here at 60K makes the most sense. And the reason why I feel that is just because, well, I think with Bitcoin and the halving on the horizon, I think we're going to be able to see some significant support in that range. That's kind of a psychological support from before. We held that level very strong. We've also, it's more common when you break through all-time highs to stick in that same range for some time before you can lose it. In other words, we broke some all-time highs here, or I guess here more so. But if we look at the comparison from before, we had roughly about 3 to 4 weeks in that range before the price ended up pulling back. So in 3 to 4 weeks, we should see the Bitcoin halving. So again, that's kind of where we're at here. I personally think that leading into the halving, we could see a little bit more retracement, but I'm feeling like 60K is probably a better case scenario. And yes, you're right. I am saying better case scenario because I would love to see 60,000. I have heavy long entries on my spot bag in that area. Okay, so I just think that it's important to continue to fill your bags. I'm super happy with that wick down to 65.5. Caught that little wick there, and it's these are a dream come true for anybody who's long-term investing like myself. So again, however you want to do it, it's funny how it works too, because some people talk about how they don't even have a spot bag. Sorry, folks. But again, it just depends on how you look at it. It's nothing wrong with that. Just saying in general, if you're only trading the market and you're not investing, you're kind of cutting yourself short, because investing is half of trading, in my personal opinion. What do you do with all your profit? Do you just spend it? It's not quite the way to go. Okay, sorry. We're not here for that. Daily time frame, let's work our way down. So there's no other way around it. We're still bullish on this coin if you look at the moving averages, okay? Because they're going to be in the range of where we want it to be. In other words, we want the price action to be in a certain area, right? So if we look at let's wait for that to load. First of all, MACD is diverging. Let's double check that here first. So MACD is diverging here. And it's one of those things that we kind of come to terms with the fact that we could continue lower. Bear in mind, last time the MACD diverged, it was this here, right? We can see right here, that's when the MACD diverged, and it was for a very short time. So we could very well see that. It could just be this little dip to bounce off 67.5 and continue higher. I think that's less likely, though. It would make sense for the price to continue lower just based on how it's performed recently. We've kind of passed this little threshold. It kind of feels like a lot of longs are just kind of waiting to take some longs instead of just buying every single dip possible. And it would make sense. Profits are profits. So if we take a look here, of course, stochastic swinging down. We lost 70 in the RSI, which is actually very healthy, by the way. This correction is normal. I don't want you to feel like the sky is falling. While the price could continue to go lower, you don't need to sell all of your bags and just kind of get too crazy with it. Me personally, I'm leaving everything. I mean, granted, my last entry before this most recent downtrend was in this 50 to 60K range. So I'm actually kind of happy to be able to add in the mid 60 range. So again, different story altogether, but what I'm getting at here with this RSI losing that, we've been above RSI, 70 on RSI since the 25th of February. So it makes sense. This is high time the price action is pulling back. It's actually a very good thing. So again, welcome the 65 to 60K range. I think I would be okay. I would kind of mentally prepare yourself for it because it does feel like the momentum has shifted here and we're due for continued correction. Now, do you just short your shirt off right now? Probably not, because I wouldn't be surprised if we see some aggressive buy orders to push the price action up. Everybody FOMOs in, they sell it right away. Okay, so I wouldn't be surprised if we see another 69K range retest. Either way, right here on the daily time frame, it does kind of let us know we're likely to come down. But once more, 20-day SMA holding strong here at about 65,000. So if we stay above 65K, we're going to probably be in good shape here to consider this to be still very much on the bullish side of things. Okay, so again, we're not in terrible shape, but we're getting there. All right. So if you can see this here, nice period of consolidation for the last 12 to 24, well, almost 12 to 16 hours at 67,500. Once again, there's a key level resistance from before. Previous daily or weekly close, and it's important to know where we're at. That's exactly why I leave some of these lines on the charts here, folks, because these are areas of retracement that are extremely common, not just aligning themselves with fib levels, which we can see this 0.382 level is very prominent, but we can also recognize too that those are areas of potential retracement. So that having been said, all these moving averages were below the 20 and the 50. That's generally a bearish sign. On the 4 hour specifically, letting us know we've shifted momentum, right? So as soon as we lost this trend line here, a lot of folks started shorting. I was waiting for confirmation at the 70,000 mark, but the price just went all sorts of wonky on us. And it didn't make sense to try to jump in and catch a falling knife. So to those of you who are watching that are curious why I didn't take any trades in there during that time, is mainly because I don't like to join a fight when it's already started. I like to get in beforehand or after, right? And right now, even though we're kind of in this after market, so to speak, there's still blood in the streets, and it's just really not ideal to consider taking positions right now without confirmation. And a lot of times confirmation comes when things can settle down a little bit more, right? We don't have any settling at this point. We're still in this transition. So I would just recognize that a good trade right now is no trade, and I hope that you can understand that. Having said that, MACD and stochastic RSI is still essentially swinging down. Money flow index coming down as close as 30, and then traditional RSI is right there about 39. Now, if we look at its history, we haven't seen any RSI close to 30 in a while. It's been ever since January 24th. That was the last time. It's been a while. But if you take a look here, like January 24th, that is this guy right here. This is when the RSI was below 30. Okay, and it did wondrous things afterwards. So I would say just wait a little bit longer to be patient because we're getting closer to 30. It doesn't imply that the price action is just going to recover. A lot of times, though, you can, on the 4 hour time frame, have success when the RSI is at 30, money flow index is at 20, and of course, you get that MACD shift in momentum to hopefully have a convergence. If we go sideways for a little while and then down, we will see something along those lines. So again, we're not in a good situation just yet, but we're getting there. So to me, I think it's premature to jump in and try to catch a long or a short at this point. I would say statistically, though, you have better success going to the downside than the upside, just based on the way that things have progressed, right? We're just going to draw this trend line out here, kind of just pay attention to it. I'll just use our candle wicks there and kind of just recognize that that's where we're at. And then we'll draw a little line out here too as well for the moment to kind of pay attention to this lower 0.5 fib level. That is once more 65,600. So you see how perfect this transition is, right? The price comes down here, consolidate at previous support 0.2367K. Psychological support, we get the bounce. That was referred to as commonly a dead cat bounce. Price comes up, destroys both longs and shorts in either direction, and then the Asian market dumps. Now that we're here, we can see steady consolidation at 0.382, 67,600 as a round number, rounding up just a little bit. And then of course we got this ugly candle wick that came right down just perfectly, what do you know, to 0.5 fib, 65,600. So 65.6, 67.6 are the two round numbers to kind of focus on for support and resistance. If we lose support here at 67.6, we will likely come down to leg down to 65.6. That's kind of the next stepping point, if you will. Another thing to recognize too, and it's kind of pretty obvious to me when I see it, if you kind of look here, kind of zoom in, you can see its resistance here quite definitively at 68.7. So it's another little area we just want to pay attention to. Essentially telling us that we're fairly range bound between, round number, we'll just say 69,000 if we round up. I know it's pretty aggressive, but 69K as low as roughly to say 67. So 67 to 69K is that range, that rough range, but more specifically, we got a pretty solid resistance at 68.7. Last but not least, take a look at the Ichimoku cloud, confirming complete bearish behavior. There's no other way around it, folks. No sugarcoating here. We are completely bearish. We can, however, see if the price can progress sideways for another 12 to 24 hours. We might be able to see that consideration for a close. In other words, you may want to consider taking some profits on your open short position with this coin. Would I consider taking profits? Yeah, definitely, just because we don't truly know where we're going to go next. But we are absolutely bearish. We're working, this descending trend is working concurrent with the actual cloud itself. So again, until we can close somewhere like just say 70K or higher in the next 24 hours, we're not going to have a leg to stand on for any potential longs. Even at that point, I wouldn't trust it just based on how Bitcoin is and how shady they are with the liquidation. Okay. So again, let's just quickly recap here. Liquidation levels in the last 7 days are heavily concentrated at about 74,000, but as low as 65K. Okay. Which one are we closer to right now? 65K. What does that imply? Well, that implies that selling pressure will continue until we sweep that extra level. That's how manipulation works, and they're going to go ahead and grab that lower liquidity. Because again, this one little leg down wasn't quite enough, right? They still got a lot of meat in the bone, so to speak, and you could say there's a lot more left here down below. So, anyways, generally speaking, that's kind of where we're at there. We also do have, just to quickly note, a previous fair value gap that was never filled between 64.5 and 65.7. So it would be safe to presume we're going to see a little bit more down. I would just highly recommend adding to your position as the price goes down if you're considering a spot bag. If you haven't considered a spot bag yet, I would loosely say shame on you. The investor in me is just frustrated when I hear that, but it's okay. Different strokes for different folks. I'm more so in Bitcoin for the long term. I swing trade and take my profits and just put it away. Really, basically what it boils down to. So everyone has a different strategy, of course, but you should hypothetically, if you're a day trader, take your day trade profits, put it into swing trading. Take your swing trade profits, put that into a hodl bag or a spot bag, and don't touch it. Okay, that's generally how the trickle or the waterfall effect should occur. That's kind of just a word I use, but something to consider. Either way, thank you so much for watching. Make sure you register for the Bitunix competition we do have. We need 20 more people before the 27th, and I think we can do that if you just go ahead and click the link below and get on registered there. It's only going to help you in the long run. There's no requirement at all, just pretty much helping you become a little bit better in certain ways. So I hope you have a great rest of the day. Thank you so much for watching. I look forward to working with you if you haven't already. Jumping over to our Discord. We got an awesome group there. Have a good one. We'll see you soon. Take care.